Welcome to OnlyPounds. This is part 1 of our investing series, where we will explain what a stock is and the basic principles of how the stock market works. If you're just looking for the most popular and virtually hands-off method to investing and still see great returns on your money, skip to the next part of this series where we show you the best method of investing and see how you can live comfortably and still retire wealthy. To begin, let's talk about what a stock is. A company looking to raise capital to expand or improve their business will issue stock, which are shares of their company, through an initial public offering, an IPO. Once these shares are sold, the company doesn't make any money from the trading of these shares between the public. So, if they sell 5% of their company with 100 shares priced at £10, they'll raise £1,000. If years later one stock is valued at £25, they still would only have made £1,000 from their stock offering. If a member of the public, also known as a retail investor, bought 20 of those shares at £10 each and sold all 20 at that new £25 value, they'd now have £500, which is a £300 profit. And if the company needs to raise even more capital, they can offer more shares of the company at the new price. So, if you were to buy a share, for instance if you bought some Apple stock, you essentially become an owner of the company, as it represents part ownership of the business. Now, this doesn't give you the right to fire your friend who happens to work at Apple, but it does mean you are essentially entitled to the company's profits, where you are paid through dividends, which is essentially a thank you from the company for being a shareholder and owning that stock. These are paid into your brokerage account on the select months over the year, depending on the stock you choose to buy. However, not all companies pay dividends, so another way you can make money from a stock is through any increase in the stock's value. So how does the stock price go up? It's basically determined by the supply and demand of a stock through the stock market. If more people want to buy a stock, perhaps because they believe in the future of the company, they will buy some shares, and often you will see fewer people looking to sell. This will in turn increase the price of the stock. On the other hand, if most people do not believe in the future of a company, you will generally see a drop in the price of the stock. There are many other factors that influence the price that you can look into. So, now you know how you can make money through stocks, by buying low and selling high, or by holding onto dividend stocks which may also increase in value. What do you do now? Well, you'll need a brokerage. This can include the likes of Trading 212, Vanguard, AJ Bell, and many other sites. The role of the brokerage is just a platform for you to buy and sell shares, and different platforms offer different fees, perks, and stocks. So make sure you do a little research into what stock brokerage you want to go with. We would recommend platforms such as Trading 212, which offer zero fee trades, meaning you do not have to pay any money to set up an account or buy shares. The platform is 100% free. Just make sure you don't set up a CFD account unless you are a professional. For those looking to quickly make a bit of money, Trading 212 is currently offering a referral program, where you and a friend or family member both receive a free share valued up to £100 when you refer them. Now, there is obviously a risk when it comes to stock market investing, as the stock prices of companies can go down as well as up. But for those looking to invest long term, with the least risk and best returns, you can invest in something called index funds. These are collections of stocks, which gives you good diversification, which basically means that you do not have all your eggs in one basket. So for example, if one company fails or goes down in value, you still have many other companies in your portfolio and it won't affect you as much as it could have. If you want to start investing in the markets, head over to the next part in our investment series, where we go through this popular and easy method of stock market investing. And just before you leave us, a few quick notes. There are other methods such as CFD trading and options. However, these methods tend to carry more risk and are usually only profitable for a professional, so we wouldn't recommend these. We're focusing on informing our viewers about lower risk, long-term investing, not trading. Also, it's worth bearing in mind that the stock market is a separate market to the forex market, as stocks are for companies and forex, or the foreign exchange market, is trading between currencies. We understand that this topic may be new for a lot of you, so if you do have any questions, feel free to tweet us at OnlyPounds and we will do our best to answer. Thank you for watching. Please like, subscribe and leave a comment sharing whether you'll be likely to invest and what brokerage you'll be using if you do. And remember, here at OnlyPounds, our mission is to expose our young people to financial education. We are not your financial advisors, and it is up to you to continue researching the best options for you. We do our best to provide information you can look into and build upon, using your best judgment. Catch you guys soon.